What's happening, guys? I hope everybody had a fantastic weekend. We've got a short week ahead. We've got a half day on Wednesday, and then we've got July 4th off. So I may sound like I'm in an air tunnel today on this video just because I'm up north. I'm in a small porch area and just working with what I got up here. So with that said, I am going to be probably 30-40% capacity this week. I'll still be doing scans. I'll still be around in the mornings and whatnot just to kind of keep an eye on the markets. And there's a good chance that I'm going to be finding some type of opportunity out there. However, if and when the morning is decent, I'm not looking to continue to trade throughout the day. With that said, tonight, Sunday scans, I do hope you guys enjoy these things. I've been getting a lot of feedback. I've got a bunch of emails recently since we've been kind of keeping up with these. And as well, in New York City, there was a lot of guys that aren't necessarily members of IU, but just the feedback that I got was great. A lot of people are learning a lot of things just from kind of getting the lingo, getting thought process, understanding the concepts, the whys. So I do appreciate hearing that feedback, and anytime you guys have questions, anything that I can help with, obviously just leave a comment. We're here to help. And also, sometimes when I do explain things, not necessarily the stuff that we go over in our educational products, but some of the other things that people may have questions about that comes up a lot, it makes for good videos. It makes for just like a couple of the ones that we've recently done on YouTube for failed breakouts or kind of anticipating unwinders and whatnot, things like that. What do we look for? And that really stems from you guys asking the questions. So once again, I appreciate the feedback, and feel free to reach out, Twitter, the comment section and whatnot. So moving on. New York City was great. I think I did a little bit of a recap, but we got a lot of photos, we got a lot of videos, things like that coming. But Sang Lucci's been talking about it a lot, and he's looking to do quite a bit more. So we started the whole meetup thing about 5 years ago. We didn't do it the first year, I don't think, at Traders for a Cause, but the prior years we had been, we did like an IU Centerpoint client type meetup, things like that. So that was always fun. But like I've said, these Sang Lucci ones take it to another level, because it's not always about just talking stocks. It's kind of talking, what are you looking to get out of this? What's your goals? And more importantly, the mindset and actually what you're going to go through as a trader. It's not always, just this particular setup, this trade, this whatever. It's a whole lot more than just talking setups. There's a whole mindset. There's a whole psychological side that not a lot of people talk about, but Sang is really good at educating folks in that area, or at least getting people to talk about it. And from that point forward, just by opening up, you start to learn a lot of new things that maybe you already knew, but you didn't really know it mattered. And as you start to focus on that stuff and work on your process a lot, your trading is going to get a lot better. So I thought that was pretty neat, and I'm looking forward to he took the last week off, but I'm looking forward to get back in the office and kind of start to brainstorm with ideas moving forward here. So May was pretty intense. We had some great trades. June was even better. A little bit of a busy month. Every single day there was something. There was a lot of IPOs. And the biggest thing for me was actually just taking the trades, not looking at what something could do potentially all day, but actually getting in there, having a plan, waiting for the confirmations, and then as the trade happens, taking the trade. Not wondering, oh, well, maybe this could go down another couple bucks by the end of the day. No. What's been really working well is scaling in to winners, and as a flush happens, sizing back down around a core. One of the most popular questions that I get is, what the heck is a core? If you start in 500 shares, you scale into 1,000 shares, and you start to scale in from there, 1,000 to 2,000 to 3,000 shares. As it flushes out, if you're going back down to that 1,000 starter that you had, 500 or 1,000, you're trading around that core. So you're taking that big picture move, and you're utilizing the fact that you were right. You're utilizing the fact that you have some house's money to go ahead and scale in around that original core. But as the trade happens, as it pans out as you expected, you need to go ahead and take that risk off. So that's where I made most of my money this past week or past month and a half, is scaling into those winners, but also getting out of the extra size that I put on in two different ways. One, as the move happens, as it flushes, or two, if it doesn't. And that's probably the most important, because my two biggest losers, and I actually, KRTX on Friday, I lost, and also ADPT, two recent IPOs, and I just got a little bit loose with them. So I started to scale into a winner. I thought that there was potential for a lot more unwind. I thought what I saw was potential heavy tape on ADPT on, ADPT on Friday. And so I started to scale into the trade in towards VWAP, and I ended up being wrong. And the fact that it held at that point, it starts to rebound, I need to go ahead and take off the extra size and just go back to the core. And it took me a couple bucks before I realized that to really shift into back into my core. So that ended up costing me a little bit of money. I was able to get back in there, and I made a great trade, because rather than trying to be a hero, I covered into the flush, And as it started to go sideways, I sized out. I got out. And that's really the key. And the same thing with KRTX. The situation here where I actually thought that we might be going 25 base and then 28.32. Something wild. We haven't seen an IPO really open up from the teen 20 range for quite some time. So I thought that, it's possibility here. And so I was in there, and I had some good, entries and whatnot. It started to kind of break out. So I started in there, ramped up, flushed out a little bit, but came right back, flushed out, came right back. And it did everything I expected, including this 24 push, which typically I'd be selling. And unfortunately I didn't. And, I had kind of sized into that winner. And instead of adjusting as it started to go sideways here, I ended up overholding the trade. So the key, or really the main takeaway here, is that's against everything that I did all week, in the sense that as you scale up into a winner, you're expecting X to happen. And if it doesn't, then size back out. And that's really the key with scaling in around the core. So at any rate, still really, really great June. A good May. I had a little bit of a rocky start on May. On the 1st and the 6th, I had some two decent loser days. Nothing ridiculous, nothing compared to November, which I spoke about in New York City. I talked about the loss that I had there, and kind of how and what I had to do to focus in on, not necessarily making it back, but at least getting into the right mindset. And so I basically kind of used that same mindset to really get back into shape from the 7th, May 7th forward. Clearly my Wednesdays need a little bit of work, but at any rate, check out those tweets that I put out there. I also put a few other comments, and I love engagement. I love getting replies and whatnot, and answering them, because that's the kind of stuff that I like to talk about. Moving into the scan, and by the way, guys, we do have July 4th Independence Day sales. So they're going to be somewhere along this scan at some point once we put this onto the main website. But make sure, if you're interested, take advantage. Reach out if you have any questions prior to signing up. Tyler is always available in the little chat pop-up to answer any last-minute questions you might have. You can email cam@investorsunderground.com or leave a comment, and we can get back to you as well. But take advantage of those. We drop the annuals pretty nicely, and you can save quite a bit versus the monthly rate, and as well as the bundles, so at least you get the educational material in there. And with that said, all of our educational material is 100% still up to date. It's the same kind of strategy, same type of stuff that I use on day one. I've just expanded on it, and what we do is we do daily videos as well as webinars, which kind of bring up any new changes, any new thoughts, current market thoughts, things like that. So that's one thing that's great about the videos that we do every single day, is it's a continual refresh of what is new, what matters, and current market environments. So with that said, PUYI, some of you guys may have been in this one. This was an idea last week on the scan, as well as on Twitter. I posted it out there at 850. Very thin trader, but just, I dabbled. I unfortunately, I didn't trade it very big, but it would have been nice. But same wicks that we talk about. We're looking for these types of wicks where they pull back and they get bought up. But the idea was at 850, and it almost hit 1350 on Friday. So as I said in the room, make sure you're at least locking some in along the way. What originally triggered my interest here was these two daily candles of 1.8 million and 1.7 million. And I went back and I checked that day that I had said that I was interested on dips, and it's not just the block. It was actually some good volume and whatnot. So probably somebody positioned in order to do this move later on, but who knows. ADP T. Nice breakout so far. Really big move, and quite a bit of range. I mean, this stuff is crazy. So we went from 40 to 49, down to 40, basically 44, up to 48, down to 42, back up to 48, 49. So, you can assume that most of the size has been worked out, and, really anything's possible. These are the type that could easily go 50, 60, you name it. So the key is going to be to use kind of whole and half dollar marks as your guides. So potentially 50, 55 parabolic, and then make some type of decision from there. A lot of it's we're going to have to see what happens tomorrow off the open. Whether or not this was just a lot of squeeze into the close, or whether or not this is just the way it's going to be, and we're going to start to base at maybe 47 and start to form a new base and then go 55, 60. So I'm not going to try to make a full plan, just like you saw with WORK and Chewy and RVLV, you just got to come to the market and see what it does in the morning. Same thing here, CRWD. You can be fully prepared, but all you got to do is stay familiar with these names, and you got to look for the setups. You got to look for VWAP consolidation, as you can see here. Nice ABCD type setup, breaks the 65. You can see prior top, and then just starts to take off. So this is where your edge is. This is the type of stuff that we're looking for. intraday on these IPOs that's not as natural as it's not as focused on the daily chart as much as a normal stock may be, just because these are relatively fresh, and it just really depends on what the IPOs are doing as a whole. The day that ZM pulled back, so did CRWD and many others. So if they're all pulling back, there might be pressure on a few. If they're not and they're all breaking out, then they might be all squeezing out. So it's always good to kind of have an idea, or kind of see where these things are at, and then be able to react accordingly. So this is the type of setups that I'm looking for. This is where your edge is. You can see the peak 65s, and then your risk would be based off of the VWAP level. So dips versus VWAP. So you got a 50-cent risk for a potential of about a $3.50 move. That's pretty good ROI. That's 6-7 to 1. Or excuse me, not ROI, but risk to reward. Work, nice swipe up there at the close. This one really ripped up. Ended up settling back a little bit after hours, but just something to keep in mind. Probably use 37s as a guide on Monday. I'd be looking for dips and potential consolidation, just shy of red to green, and then possible move towards that 38 level, 39. I was thinking originally that this would be a lot like, actually Chewy, I was thinking would be more like LK, but same thing here, where, just let them pull back as long as they want, and then don't try to, expect them to pull back at any point. I did that a little bit with LK, where you think that it's kind of rebounded too much, and no. Just let it do its thing, let it peak out, and then come back to it. So that's what I would be doing with work. I'd be looking for, maybe to retest towards the 38s at some point, and let it prove itself, let it get heavy, and then join the backside. For now, I would assume that it's going to go 38, 39, 40, and so on and so forth. IQ, great range the last couple days. Tough tape. On Friday, not necessarily tough tape, but tough tape off the open, versus the prior day, which was nice and clean and steady. So I would consider this pretty much a consolidation day. The thing about IQ is, it can look beautiful today, and it can look strong the last 2 days, but then that's it. They just kind of walk from the name. So, I always kind of keep that in mind. So basically I'd be looking 9:45, 10 a.m. plus as sort of a trend join type name. Let it kind of dance off the open. The thing about trading it off the open is you might nail it for a couple minutes, but then they swipe up. It's just like AMD, right? Where you might be right, you might think that you're gonna get it. You start to add in, and then it swipes right up. So that'll keep you out of that. Sometimes you might nail it, sometimes you won't. So the key is, focus on an edge, and clearly there isn't an edge right off the open. Unless obviously you've got a huge gap up in some type of parabolic move. So with that said, 9:45, 10 a.m. plus, I'd be looking, basically use probably 2090s as a guide. If it starts to peak there, then, obviously that confirms that level. But I'm thinking that we might have a decent, range, $1 to $2 minimum in the next a couple days here. So whether or not we're going to go to 20, 22, 23, or we're going to go right back to 19 from a gap, we'll see. But just like I said on ZM, I think it was last Sunday scan, right before that huge unwind, I was very, very, very interested in it right over here, and I said I don't know if it's going to go to basically 110, 120 or 90, but I know that there's a $7 to $8 to $10 move very, very close. And literally the next day we got it. So the key is not necessarily to try to be a hero and guess which direction. The key is just kind of trying to realize and be able to anticipate the days that are going to have the range. And that's what I'm pretty decent at kind of identifying. And so that's kind of what I focus on. Just like, Roku type situations, you could get cut up every single day trying to find the top and whatnot. But what type of price action suggests that in the coming days, whatever way it goes is going to be a very probably higher than average daily range type candle. Uber, nice breakout so far. This one had some great opportunities off the open. I like trading stuff like this, but you have to be respectful of VWAP. And so, I would assume that we're going to probably have some type of follow through. I would assume that it might have trouble at 46.80s to 47s. So I don't mind fading it versus those levels. If it were to gap and rush into that level, I would think that it's probably going to have a little bit of resistance and it's going to probably come back in, and it might actually want to retest these levels over here, 45 and maybe even 45.50s before it actually continues to go higher. That doesn't mean I'm going to step in front of it and add, but I like the idea to expect some type of gap up, rush into this prior resistance, and then potential fade off. With that said, if it fades off and it starts to do a little curl up like this, then obviously you can't be fighting that. Now, Chewy was the one that I was talking about that reminded me of LK. And so that was on the last Sunday scan. I was expecting it to kind of do basically this and then this. So we're kind of in that right now. And so with that said, I don't want to be aggressively anticipating that it should pull back. I want to expect that it's going to go further than I think. And so week opens, higher the better. Maybe we get back up towards these candle highs, squeeze out a bunch, and then start to pull right back. And you can see that LK did exactly that. So it went a couple more days than people expected. Right now, we're right about here on Chewy. If you guys looked, that's the VWAP on the daily. So we're right about day 3 or 4 on this rebound here. So we might have that next big candle day and then the next gap up. But just don't try to find the top is my point. CDMO, really nice one. I got long here. This actually reminded me a lot of my QFIN trade from Thursday that you guys might have seen. But I got long over here. Nice breakout. The only thing I did wrong here was, I was up quite a bit over here. But I didn't size down enough. I was actually still thinking it could go higher, which it did, but not until it consolidated for the entire day. So I ended up pretty much selling in this area over here. Later on in the day, a couple people in the room were curious about, hey, what do you think? Do you think this thing could go? And there's zero edge. So this is a great example of I'd rather buy higher. I'd rather buy higher than buy at 520s, 530s, because 520s could easily end at 480s, right? If it fails and slaps. So yeah, you've got great support here, 510, 520s, but you've also got resistance, 530s and pretty much 540s range. So until it breaks through there, comes back and it holds right here, you don't really have an edge. So that's where I started in long. And I pretty much made it to about 580s or so, 570s, 580s. But overall, good trade. It looks like they had quite the imbalance there, probably the Russell related. But with that said, this is actually has quite a bit of daily chart resistance right at this level. So with that said, I wouldn't mind shorting it, but I don't want to get too aggressive getting ahead of it. So if it gaps up and it does have trouble, then I would not mind leaning on it. So we'll see. Good volume regardless, even without, if you take this likely Russell candle out, still pretty good volume day. So it could be that, consolidation day. Typically with moves like this, I would expect it to kind of pull back and then consolidate for 1, 2, maybe 3 days and then continue on. So we'll see about that. TPW, this is just a crypto turd. I'm long some. I had bought it the other day. I never took it off into the 37s. So I was long, high 20s. I was up about a dime on it or so. I didn't take it off. Ended up coming back in, came back nicely. So I'm just going to let it do its thing. It's not a major position, but it's been a little bit of time since we've had a 40 to 50 to dollar type ripper. So maybe it's a potential. IDEX, this one again, looks like a Russell candle here. You can see the volume here, 3.6 million. That's not a normal print. That's a market on close. It did have quite a pullback, so just kind of take note on that. But what I'd be looking for is weak opens, and as long as 220, 225 bases, then we have a possible breakout. It's pretty nice chart here. I would not want to own it if 210, 220 can't hold. And I also would not want to chase the breakout. IOVA, I've been talking about reminding me a lot of AXSM since about 16 or so on Twitter. And so you figure the news was here on AXSM, consolidated, started to take off, and you can start to see the similarities here. So that's when I started to compare it right over here to AXSM. Nice breakout. We did have a good kind of push out day. And I got involved short over here. It did pull back for a little bit of time, but it ended up kind of squeezing out. So at this point, I'd be using all whole and half dollar marks as a spot where I would get interested. So that's why I was kind of interested into that 24 push, and then the same thing over the 25 push. But I didn't really get involved into the breakout level. I joined the fade later on in the day on Friday, but for now, one thing that I remember about AXSM is it's a very difficult trade. So there is those pullback days, but just remember that the days that it pulls back, there's like an invisible hand in there. So they come right back up and buy it up. So the key, really for me anyway, is just make sure you've got some of those wish orders out there. So for example, if you are short and you're thinking that it's going to flush out like $1.50, just put some of those orders out there, because a lot of times it'll flush out and then that's it. And they'll slowly pick it back up from there. And you'll be left thinking, oh, I could have covered for $1 better. Let me just hold on to it. Let's see if it kind of pulls back, and then it never does and you end up losing. So anyway, SSYS, just literally straight up. So a situation like this, usually I'd be looking for ideally some type of 30 push, maybe sit back towards 28.80s, 29. But I'm thinking that it's going to probably need to consolidate for a few days after whatever happens on the open tomorrow. So weak opens, I think we could probably come back to the 28.50 level. But other than that, unless it gets heavy at 28.50s and whatnot, I would assume that it's probably just going to kind of tighten up range and probably not offer too much. MLNT, this was a great trade on Friday. I got long over here, and it's hard to size this kind of trend, obviously. You can just tell by the candles compared to, the days that it was running, the difference here. So much smaller trade, but bigger picture type of idea. Weak opens for a potential breakout. The key to remember though is if we get a gap up and it fails, gaps up 697, something like that, and it fails, we might just have a candle just like this one right here where it gaps up and it pulls back. So just be prepared for that. But for now, I do think that we could have a nice little breakout. RAD was huge the other day, pretty much consolidated on Friday. It had a little bit of pre-market action and then just sat right back. So at this point, I would assume that it's going back under 7 until it proves otherwise. Quite a bit of volume. It's been quite a disaster even since the reverse split. So I would expect it to continue to fade off. The only way that I would trade this thing long is if 820 starts to base. Only size would probably be if we had some type of trend setting up and the volume picking up. So that's pretty much it on that one. MCTH. MTCH rather. And remember, guys, I know I'm going over a lot, but I'm not going to trade them all. It's all about just being familiar with a bunch and then fine tune your scan to 1, 2, 3 names in the morning, maybe 4 max. But by seeing these over and over and over, you can react that much faster. You know, if I didn't have this thing on scan, I wouldn't have nailed the pullback day a couple days ago. So this one, I think higher the better, and we might be going towards a 65 and unwind. So I could see this potentially unwinding probably $5 to $8 in the near term. So this is kind of like a ZM example. You know, I feel like we're very, very close to a $3 to $5 move. Whether or not it reclaims and it gets back over 70s, no, that's possible. But for right now, it looks relatively weak. So I just wanted to be prepared for whichever way it does go. But I think we're going to have a $3 to $5 candle soon. MU, no real bias. It's been a beautiful trader. I got short on Friday pre-market. Minimized, of course. But nice action since they did the earnings. Maybe some gap up and push towards 40s. Maybe we'll have a nice opportunity there. But with this type of volume, 50 to 100 million, you can trade, pretty decent sized position. And last but not least, Overstock. It seems like they've got shorts kind of in a bind again. We talk about these wicks, right? So I'd be watching the dips and see if they accumulate it back up, and lower the better, as long as it gets supported. So, it's not even about buying this flush, but if dips after that start to get supported, that's where your opportunity is, that's where your edge is, and that's what I'm looking for. So I think they did a pretty good job of trapping some shorts. We're at a very big level right here of resistance. And if we get back through there, this kind of reminds me of like a PYX style trade where, if you guys remember, it starts to have one of these types of moves. And I could see that kind of happening. And Dallon's done it a couple times before. And obviously Overstock has a history of doing it as well. They're pretty good stock promoters. So that's the rest of the scan. Like I said, I'm not looking to trade them all. I like to get a full feel for what's going on in the market. And then as the market starts, in the morning, I start to fine tune that down to a couple names and zone in and focus on just that. So that's about it for me, guys. I included the tweets that I was talking about over this past weekend, so you guys can go ahead and back through those and check them out. If you have any questions, reach out. And I hope you guys have a good rest of the weekend.